Hi there, welcome to GrainTV. It's Monday, November 30th. We had a mixed day in grains. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, corn was up 5 cents a bushel, while beans managed an 8-cent advance, and wheat in Chicago was off a miserable 3.5 cents a bushel as a result of continued pressure on the delivery front month of December, where we've had an exceptional number of deliveries. Over 2,300 contracts are being put up for delivery on that D's contract, which continues to pressure the Chicago wheat market. In other news today, we had news out of Argentina. The newly appointed Secretary of Agriculture for that country has said that immediately upon taking power, the new president will eliminate taxes on corn and wheat, but continue to phase down export taxes on beans. So far, we've seen little activity from farmers there in Argentina to aggressively market those beans, so probably going to be a slow impact in terms of marketing, but certainly it's something that continues to garner headlines. In beans, we did see a really strong move today up above the 50-day moving average. You can see on the daily chart here from the grain hedge trading platform, closing above that 50-day moving average, getting to the highest point we've seen since early November. That's a good sign, continuing this trend of higher prices that we started last Monday as a result of that key reversal. Other news today, we had export inspections out, and yet again a mixed bag of news here, with corn coming in very light in terms of export inspections, below 300,000 metric tons and below expectations that were running at 450 to 650. Beans coming in at the high side at 1.8 million metric tons, and wheat somewhere in the middle here of expectations at 275,000 metric tons. The other piece of news that was sort of interesting came at the close when the US EPA finally announced their renewable fuel standards for the upcoming year, and somewhat surprisingly, they actually bumped up ethanol numbers compared to what they had proposed in May. In May, they put on the proposal block a 14 million gallon a year proposal for ethanol. They actually came out with a final rule today that said that number would actually be 14.5 million gallons, or 14.5 billion gallons a year. So that's somewhat supportive to corn. But again, we're still caught in the overlying fundamentals that are negative in terms of big supplies, slow export numbers. The dollar continues to gain ground. We saw another rally in the dollar today, hitting 8.5-month highs. The European Central Bank there looking to continue stimulus measures, which makes our dollar stronger compared to their currencies. So that strong dollar continues to take its toll, especially in wheat, where we play second fiddle in the export market. So our price is exceptionally out of the market sphere for many of the big deals that are going on there. But overall, a fairly positive day with corn and beans advancing. Let's see if we can keep that momentum going into Turnaround Tuesday. Join us tomorrow on GrainTV when we'll see how the markets are trading. Have a great day.